Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark examines the latest action on the equity markets. Zeal LLC CEO Adam Hamilton looks at the positive side of silver and how it can outlever gold in so-called interesting times. Dan Harris from ChinaLawBlog.com examines the flood of money leaving China and where it's going. We'll talk to Ross Clark right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Nice to be with you, Jim.
The major stock exchanges and even the small caps seeing a record week.
It has been a good week all round, and even Donald Trump, who had one of probably his worst day as president on Thursday, turned around and talked about tax hikes, changed his opinion on the One China policy, and he's going to be visiting with Abe next week. So that put a nice little catalyst under the U.S. markets to finish off the week here. The shame of it is, though, this rally is really without a lot of cheerleaders behind it in terms of the participants. You know, we're muddling along with very, very low volumes as we grind our way higher. So it's an unloved bull market right now.
What was behind the Toronto Stock Exchange's record high?
Oh, well, the financials are doing famously. You take a look at you look at the banks; they are all pushing up just into levels that you take a look at the major banks. We haven't seen numbers like these ever. The interest rates have been helping them out. The spread between short and long-term rates has been more attractive. You know, and you take a look over at the life cos; they're getting outright higher levels on interest, so that helps them out for their long-term obligations. As I like to look at the seasonality here, we were due to be strong into the middle part of February before you start to see any potential rollover. And I would say at this point, this is where you need to, even though we're, quote, breaking out once again to new highs, it's as you hit these new highs that you have to always be cautious, recognizing where and when things might have a bit of a reversal. And we're looking very, very short term here as far as the S&P is concerned. If it were to close through below the lows that we saw during the week, the lower part of the week, that would be a suggestion that the correction into March might be starting at that point.
Have any other markets been like Toronto with a 30 or more % gain over the past year?
Well, I think the one that might surprise most people is Russia. You take a look at the Russian ETF priced in U.S. dollars, and that's taking all the currency play out of it. That ETF has gone from $12 to $22. So this is almost a double in the span of 12 and a half months. So it's been euphoria around the world.
Gold, is it going to hang in around the $1,200 mark?
Well, we had a great rally, peaked out this week into the 1240s, and that, from our definition that we look at, should confirm that the 8-year cycle low is in place, that was the retest in December, the retest of the year ago low. So, from an optimum perspective here, one should be looking for minor corrections, maybe back towards 1200, as an opportunity to be a buyer. We did see some pretty good upside, what we call exhaustion levels, as we went through the 1237 in the middle of the week, getting overbought, in need of a correction. And you can see that in particular, some of the silver stocks, a few of the gold stocks are actually back to the highs that we put in last summer. So The good ones are ahead of themselves and need to correct. And our view is that you still buy, even though they may seem a little expensive on the relative to where they've come from, you want to be buying the strong stocks on corrections rather than picking off the ones that have failed to participate in this rally.
Have gold miners been a great producer?
Well, they've been a great producer for this year. The miners have outperformed bullion by a significant amount. You take a look at GDX, it's gone from $19 up to $26. So you got a $5 or a $7 run off a 19 base. Percentage wise, that beats bullion almost 2 to 1. So, and if you look at the silver ETF, you're going to find the same thing there. Silver producers been outperforming the bullion there. And from our perspective, silver also looks as though it's got its nice low in place at this point. Needs to hold the 1630, 1640 level, but that shouldn't be a problem.
Ross, thanks a lot for chatting with us.
Be with you next week, Jim.
And if you want to know more about silver, stay tuned because we'll be talking silver with Adam Hamilton next on This Week in Money.
Always consult your investment professional before making any investment decision.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Adam Hamilton, CEO of ZealLLC.com. He's speaking to us from Colorado. Welcome back to This Week in Money, Adam.
Hey, Jim. Thanks so much for having me.
Today's show is going to focus on silver. Is silver close to the end of a long-term bull market, or has silver begun a new bull market?
Well, we're definitely not close to the end of a long-term bull market. As you and your listeners know, silver just got hammered over the past few years. Silver tracks gold very closely. So silver got sucked into that gold bear market in recent years. That in turn was driven by the extreme Fed easing. Back in late 2012, early 2013, the United States Federal Reserve launched and ramped up their third quantitative easing campaign, Jim. And that was way different from QE1 and QE2, in that QE3 was totally open-ended. So the Fed didn't say in advance how big, how many, billions, hundreds of billions, trillions of dollars of bonds they're going to buy. They just kind of winged it and did it on the fly. And they used that to their advantage. Whenever the stock market started to sell off, Fed officials would come out and they'd say, hey, don't worry, we can always ramp up our bond purchases, so they kind of put an implicit backstop under the stock markets. Whenever they sold off, the Fed stepped up, they'd talk, and traders just stopped selling. And so there were no corrections, no pullbacks, no meaningful stock market sell-offs. The Fed kind of squeezed cycles out of the stock markets entirely from 2013 to today, early 2017, but especially 2013, 2015. The American S&P 500 just went up and tracked the Fed's balance sheet perfectly. And this is really important for silver because silver follows gold. Traders buy silver when they expect gold to rally and keep rallying. They sell silver when they expect gold's going to be weak. Silver technically is essentially a leverage play on gold. If gold's going to go up, silver's going to go up more than gold. If gold's going down, silver's going to go down more than gold. And so the stock market's levitated between 2013 to 2015, especially on that Fed QE3 campaign. Silver just took a massive hit along with gold. I mean, silver was trading, back around, $35 an ounce in late 2012. And, it was just around $14 an ounce in early 2016. In early 2017, $16 an ounce, or actually late 2016. And so we're definitely not at the end of a long bull market. If anything, we're near the end of a long bear market with huge upside potential still. The silver cycles are very favorable for it, and I'm really bullish on it right now. And it's priced really low, absolutely, in the context of the last 10, 12 years, without any doubt.
The U.S. dollar just put in a rare outside reversal month to the downside in January. Is this bullish for silver?
it's very bullish for silver. Once again, we got to take the gold angle, because if you look at daily silver data running back from whenever, 1975, as far back as you want to take it, Jim, there's just a huge positive correlation with gold. There are rare times when silver will break out from gold temporarily, but silver always kind of gets back in line with gold. Like back in the 90s, I don't remember the exact year, but there were rumors, or maybe Warren Buffett actually took a position of silver, and silver had a spike independently of gold, but it didn't last very long, a matter of a month or two, if memory serves. But back to your question, the dollar, there's two constituencies moving gold right now. They're American gold futures speculators and American stock investors who are buying gold via the flagship American GLD Spider Gold Shares Gold ETF. And in the first group, the futures speculators, their most important trading cue is levels of the U.S. dollar. When they see the dollar go up, they want to sell gold futures. When they see the dollar go down, they want to buy gold futures. So because the dollar is topping right after a 14-year secular high back at the end of last year, if the dollar keeps selling off as it should, there's all kinds of technical and fundamental reasons for this, and sentimental too. It's just amazing how overcrowded this long dollar trade is. But as the dollar keeps selling off, American future speculators are going to buy gold futures. As they buy gold futures, that'll push up the gold price. Unfortunately, the American gold futures gold price is kind of the world's benchmark gold price. And so these guys have just way outsized influence in the gold market compared to what they should have based on the amount of capital they're trading. But as gold goes up on futures bids, as the dollar sells off, silver is going to catch a bid as well. And there's just nothing that motivates silver investors and speculators to buy the white metal like rising gold prices. And a weaker dollar is absolutely bullish for gold and therefore really bullish for silver, which leverages gold's upside.
Is President Trump good or bad for silver and silver stocks?
I think he's going to be really good for silver and silver stocks, Jim. And going back to your dollar question, I think that's the primary reason. Trump's main thing is America first. He wants to have American jobs in America, and he wants to have export jobs. He wants factory jobs. He thinks they're high paying. He thinks they're desirable, and they're certainly better than a lot of service jobs. I mean, personally, I'd much rather work on an assembly line for $25 an hour than flipping hamburgers for $8 an hour. But one key thing for exporting is that the strong dollar policy that's been a kind of a mainstay of U.S. administrations for my entire life, as long as I can remember, that's going away. Trump hasn't really talked about the strong dollar specifically, but his top advisors have. One of his main advisors, his chief trade guy, is a guy named Peter Navarro. He's a professor, I think from out on the West Coast somewhere, but he's written books on China and trade, and he's been on CNBC a lot in the past 10 years or so, and he's just a hardcore free trade guy, anti-China guy, pro-U.S. export guy, and he's talking down the dollar. As some of Trump's other top people are talking down the dollar as well. And with the U.S. dollar index at 14-year secular highs as of late December, there's a lot of room for the dollar to fall. The lower the dollar goes, the easier it is for American companies to export. Our products are more competitive price-wise for foreign buyers. And so a lower dollar boosts gold prices by that futures mechanism. So the dollar sells off because Trump's people are talking it down. American speculators buy gold futures. As gold goes up, silver becomes really attractive and people flood into it. So as Trump talks down the dollar to help with his U.S. factory jobs and exports, I think silver is going to be a huge beneficiary by virtue of the gold rally that the dollar fall is going to generate.
Are we looking at a possible silver shortage?
That's a really interesting question. I read a lot of that stuff. I'm familiar with the literature on it and some of the rhetoric. But I'm kind of a hardcore data guy. I just like hard numbers. That's always been my style. And to the best of my knowledge, there's only the gold market has this data published 4 times a year by the World Gold Council. There's these reports called gold demand trends that come out like 6 weeks after the end of every quarter, and you can see what global gold supply and demand are doing with the best available data. But silver is much murkier, Jim, which is really frustrating for me and lots of silver investors. There's a similar silver report published by the Silver Institute, but that's published once a year only, and it comes out in early May. And so at this point, I have no idea what global silver supply and demand fundamentals look like in 2016. I have 2015's data, which was published in May 2016, but 2016 data isn't coming out till early May 2017. And so I don't know from an overall standpoint. You hear about shortages of coins periodically, but I think that's kind of misleading. The silver market is way bigger than coins. Coins are a small part of it, especially like silver eagles. The U.S. Mint has had so many problems producing silver eagles over the years. They're beautiful coins. They're in such high demand, but I don't know any serious investors who buy them in quantity because the premiums are so high. I think the U.S. Mint charges like $2 an ounce above spot to the wholesale dealers, and the wholesale dealers charge a premium on top of that to the retail investors, and so the premiums are just way too high. I've always, myself, and also advised my subscribers to, if they're going to buy gold or silver, buy the biggest possible quantity you can get for the amount of dollars you have to spend, and therefore the high premium coins that have shortages just aren't appealing to me as a silver bullion investor. I understand there's numismatic, there's rarity issues, some people are into that, but I'd like to have the most bullion possible, and so I don't think those silver shortages apply in individual coins reflect the broader silver market. Another thing I've been looking at is copper prices have just soared since Trump won the election back in early November, and base metals production is up on the hopes that Trump's going to do a lot of infrastructure spending. Who knows if he will or won't? Who knows if he can or can't, depending on how the U.S. Congress feels. But there's this view in the markets that infrastructure spending will come through. And I know mine decisions are long lead time decisions, 3 years, 5 years, a decade, but I get this sense that miners are going to try to ramp up base metals production to kind of take advantage of the rise in base metals prices they're seeing and expect to see under a Trump administration. And if that's the case, something like 2/3 of silver produced globally is a byproduct of base metals and gold mining. And so it's hard to see a shortage of silver when mine supply has potential to ramp up in that byproduct standpoint. So from what I understand, I don't think there's a shortage of silver supply, but I respect the guys who do think that. If I had more data, I could be more, have more conviction in that, Jim, but I don't see it yet without the data.
How do the commitment of traders numbers look for silver?
That's a really good question. I track those every week, but I haven't graphed them for a while. I've been watching golds really closely. So I'd have to get back to you on that. I look at them briefly, but I don't have any context in the trend. It's been a while since I've written an essay on silver COTs, although I'd look at gold COTs and track that all the time. My memory is that long positions were still fairly high. Nothing like they were back in summer of 2016 when silver was getting popular. So that's kind of negative. You generally want to do the opposite of what the future speculators are doing. If they're really bullish, if they have huge long positions, silver tends to be topping. Now, if memory serves, the COTs aren't super high, but they're definitely high by recent years' standards. And so I don't think the silver COTs, based on my memory, are really bullish or really bearish. No real opinion on that.
Is the silver market still rigged, and how do you play a rigged market?
That's a tough question. There's obvious reasons why governments wouldn't like gold. If gold rises in a local currency, it might highlight things the government is doing. They're debasing their currency. They're inflating too much. They're living recklessly fiscally, and gold can kind of be a warning signal on that. But silver is such a small market; it's hard to see governments wanting to keep silver prices down. Once again, there's a huge amount of literature on that. A lot of people think that silver market is actively suppressed. Maybe it is, but it's a huge global market. People can buy and sell silver all over the world, and back alleys and third world countries, anywhere. And it's just, unless you control most of the participants of a market or the vast majority of the volume, it's hard to suppress prices. And so I don't see the silver market as manipulated. That might be a contrary opinion in silver circles, but I've been able to buy and sell silver freely all my life. No one's ever coerced me. I talk with hundreds, if not thousands, of investors. They've never had a problem buying or selling, unless they want to buy a coin that happens to be in short supply. But, in a manipulated market, unless you control most of the participants and most of the volume, it's hard to do. And so I don't think the silver price is rigged in the classic sense. I don't think there's someone who has such control over the market, even the future speculators, they can say, okay, we want silver to be at 17 for 3 months. We want it to fall to 12, whatever. I don't think that's possible based on my knowledge after 20 years of trading silver and silver stocks actively. So I don't think it's rigged, but if it is rigged, all you have to do is look at the technicals. How do you trade a rigged market? If you look at a silver chart, silver has highs, silver has lows, it goes up in bulls, goes down in bears, and all the technical and sentimental indicators that work for other markets work fine in silver as well. I think that argues against manipulation, but you can certainly trade it based on fundamentals, technical sentiment, even whether it's manipulated or not, whether people are actually trying to change the price for political reasons or not. So the point's kind of moot to me, Jim. As long as I can trade it and make money, which I have very successfully in the past 20 years, I don't really care who the buyers and sellers are personally.
We're speaking with Adam Hamilton, CEO of ZealLLC.com. Do you see any catalysts that could propel silver to the upside?
The main thing, Jim, is a gold rally. For the reasons we talked about, the U.S. dollar is overbought. It needs to fall. That'll drive gold futures demand. The U.S. stock markets are crazy overbought, crazy overvalued. One of the things we do at Zeal is we look at the individual trailing 12-month price-to-earnings ratios of all 500 S&P 500 companies. That's, of course, the benchmark U.S. stock index. And their simple average as of the end of January was 28.3 times earnings. And that's actually conservative because for companies like Amazon or companies that have PEs greater than 100 times, we actually truncate them at 100 just to keep outliers from skewing the average too much. But, at 28 times earnings, the U.S. stock markets are technically in bubble territory. And that's just such a dangerous place. The bull market's almost 8 years old. It's up 240% in S&P 500 terms. Markets are cyclical. There's bulls followed by bears. They go up and down. And we're way overdue for a major sell-off in stock markets. And I think that's really bullish for silver because when stock markets fall, people all of a sudden remember that, hey, I should diversify my stock-heavy portfolio. Maybe it's not a great idea to have 100% of my investable assets in stocks. Then they start to think about precious metals again. Everybody should always have 5% to 10% of their investable assets in gold and silver bullion. Always. It's just the ultimate insurance policy. You never know what's going to happen to markets, to politics, to geopolitics, and it's just nice to have physical bullion in your own immediate possession. But when stock markets are high, trading near record highs, people forget that they should diversify. They can't just own 100% stocks all the time. But when stock markets start selling off materially, they start to look at gold again and therefore silver, and they up their portfolios. And so I think we'll see huge new investment buying in both gold and silver as the stock markets sell off. Could be a gradual sell-off, doesn't need to be fast. Certainly don't see a crash coming, but a 50% bear market, cutting stocks in half over a couple of years is wildly overdue and highly probable. And in that scenario, stocks falling on balance for a couple of years, losing half their value, gold and silver will just be hugely valued and see massive investment capital inflows. And so a weaker dollar and weaker U.S. stock markets, which will weaken world stock markets, I think are the most bullish catalysts for silver investment demand going forward here.
Is silver a better speculation than gold? And if it is, why?
Absolutely, without a doubt. Silver's a leverage play in gold technically, unassailable based on the data. The correlations are crazy high over any period you want to look at. But the thing about silver, Jim, is it's such a small market. We talked about silver fundamental data a little while ago. The latest fully available is 2015, because last year's isn't out yet from the Silver Institute. But anyway, if you look at the total value of the global silver market in 2015 per the Silver Institute, it was about 1/9 the size of gold's. Therefore, $1 invested in silver has about 9 times the potential price impact of $1 invested in gold. So if you have hedge funds move $1 billion of capital in the gold and $1 billion of capital in the silver, silver is going to have 9 times the upside of gold just by virtue of its small size. And, I think that's what makes silver have such incredible speculative potential. It's just the volatility is so incredible because it's so small that relatively minor capital inflows in the context of the broader stock markets are just make huge price differences in silver. And that's not the case in gold. Gold is a massive market. Trillions and trillions of dollars of gold above ground, and the amount of silver that's in mined is so much smaller, and the market's so much smaller. And so when you have a small market and relatively large capital flows to that market come in it, there's just so much more potential price moves from it. And I think that's why silver is a better speculation than gold. And I think that really plays into psychology too. Silver's almost like religion for some people. It's just such a passion, which is cool. It's neat. And the reason that people are so passionate about it is because it's very rare in the markets that you can buy something outright and see 100% gains in 6 months or a year. If you use leverage and margin or options, that's possible, but there's been many times in recent years where buying silver you could have 100%, 200% gains in a year or so, and that's just phenomenal. And there's just nothing else like silver, and it's so alluring. You make a hit like that once, triple your wealth in a year, and you're just addicted to silver for life. It's such an exciting prospect. And so I think the psychology builds off that small market thing where volatility is so extreme.
Is that why the Hunt brothers back in the 70s tried to corner the silver market? Because it's small enough you can try to do that?
I think it is, absolutely, yep. I haven't read about that recently, but I seem to recall that the size of it was a major factor, and also the psychology involved because of the size of it. I can't say silver is the smallest commodities market, but I think it is the smallest commodities market. I don't know of anything else that's smaller. Silver is an important metal industrially. There's a lot of applications for silver that are absolutely essential. But in general, the products that use silver use such tiny amounts of it, like your smartphones, whatever, that the overall demand isn't huge relative to the size of compared to other commodities markets. Like if you compare silver to copper, for instance, vastly smaller. Silver to gold, vastly smaller. And so I'm sure the Hunt brothers took market size into consideration. The smaller the market, the less capital you need to make a really big impact in price, obviously.
The silver miners, at this point, are you more bullish on the majors, mid-tiers, or the juniors?
I think the mid-tiers are always a sweet spot. The juniors absolutely have more upside potential, but it's really hard to bring a new mine online. People are talking about 20-year lead times from discovery. You discover a major deposit, 20 years to get a mine permitted, financed, built, and running. That's such a long time. And so there'll be a few juniors that are home runs, just incredible gains, 50 times gains, but I like the mid-tier, the smaller silver producers. They're already producing, they have cash flows. And the cool thing about a producing silver miner is that once they have cash flows, it's really easy to model what increases in silver prices do. They all report their costs every quarter, both cash costs and all-in sustaining costs. All-in sustaining costs in particular are what it costs a silver miner to produce each ounce of silver on a replenishing basis, like including exploration for silver to replace the silver they mined and depleted. And if you look at those costs, say they're around $10 an ounce, and silver goes up let's just use round numbers here. Let's say silver's at $14 an ounce. I know it's higher than that, but you $14 an ounce silver, $10 per ounce all in sustaining costs. If silver goes to 18, I don't know what percent increase that is from 14, not huge, but that doubles their profit from $4 an ounce to $8 an ounce. So on, whatever, a 30% increase in silver, you get a 100% increase in silver mining profits. And so I think the smaller miners are the sweet spot there. They have huge upside leverage to silver prices. As their profits explode, investment capital just flood into them. The majors are great too. The majors have the advantage of being on the radars of hedge funds. As hedge funds come into silver stocks, they'll look for the majors because there aren't that many silver stocks out there, and there's not that much liquidity in the silver stock market. The main silver stock ETF in the States is a Global X Silver Miners ETF. SIL is a symbol. I'm sure your silver listeners are familiar with that. That ETF is probably the biggest silver stock ETF in the world as well, Jim, and it's 1/40th the size of the GDX Gold Miners ETF, 1/40th, like 2.5%, just $275 million of assets. So there's really not that much liquidity in the silver market. So the hedge funds will go into the majors, but I think the best gains will be in the smaller miners. I don't mean small miners, but just guys who produce 1 million, 2 million ounces of silver a year. And, have real profits, real cash flows, real upside leverage to silver prices. Those stocks should just soar. We own a bunch of those, and I'm always looking for more of them.
We've heard some crazy predictions for the price of silver, which right now is just under $18 US an ounce. We've heard anywhere from $50 an ounce to perhaps even 1-to-1 with gold. Do you have a price target and a time frame for a silver high?
Well, 20 years in this business has taught me that price and time are kind of foolish to make those kinds of predictions because you're going to be wrong in one, you're guaranteed. I think parity with gold is ludicrous. I've never heard that, and I can't imagine that being possible based on the fundamentals of silver. Even in an extreme speculative mania situation, it's hard to imagine silver, I don't know, above $150, $200 an ounce, $300 an ounce maybe, but to get up to gold levels, it just seems impossible to me. That'd be incredible if it happens. Back in, I think 2012, before the Fed got crazy with its third quantitative easing campaign we talked about, silver was around $30, $35 an ounce, over 35 at points. And so I think 35 to 40 is a really conservative target. If memory serves, back in early 2011, silver challenged 48 or 50. That shouldn't be a problem either. And so $50 silver seems like not a big deal, especially when people get excited about it. You get the animal spirits going in silver. You get that speculative mania thing. You get the general population starting to buy silver. People aren't usually precious metals investors. They could go up pretty extremely. But like back in January 1980, when you have one of those popular manias, the price just rockets straight up for a month or two or 6, and then just literally crashes after that, and you lose all the bubble gains. So I could see, a few $100 an ounce maybe on a stretch target, but parity with gold seems just way too aggressive for me.
Where is the gold-silver ratio now, and historically, where has it been when silver tops?
That's a great question, and that's actually one of the reasons I'm most bullish on silver right now, Jim. It's trading around 70 right now, 1 ounce of silver is, or 1 ounce of gold is worth about 70 ounces of silver. Before the stock panic in 2008, the average was about 55. It took about 55 ounces of silver to equal the value of an ounce of gold. After the stock panic from 2009 to 2012, that was about 57. So that 55-ish average is held both before the stock panic, which was a huge discontinuity in the markets in the way gold and silver were priced, and after the stock panic. So I think 55 can be seen as fair value in modern times, just in modern context. At $12.50 gold, which we're nearing now, if you have a $55 silver gold ratio, that yields a silver price target of $22.75. You get up to 1,400 gold, which is nothing compared to where it was in 2012, 2011. A 55 SGR gives you a silver target of $25.50. And these are big price increases from current levels. But the thing about the ratio between silver and gold is that when you have extremes like we had back in early 2016, the SGR fell as low as like 83, 84, which is insane, almost the lowest ever, but only exceeded by the stock panic briefly back in late 2008. But when you get these extremes, you have mean reversions back to that 55 mean, but they never conveniently stop at the mean. If silver's too undervalued relative to gold, it doesn't just get back to fairly valued relative to gold, it overshoots the opposite side. Back in early 2011, when silver was getting to speculative mania levels of popularity, the SGR fell as low or went as high as 32 times, depending on how you want to look at it. So 35 times is not an aggressive target for a major silver upleg, the end of a silver bull when silver's popular. If you had $1,400 gold and a 35 SGR, you'd be looking at a silver target of $40 an ounce. That's why I think $40 or $50 an ounce is nothing. Really conservative, really safe, really easy defendable target. And if silver goes to $40 or $50 an ounce, I mean, today's silver stocks are going to go up, 5, 6, 700% from here. It's just going to be absolutely incredible gains based on their profitability. But yeah, the SGR, the lowness of the silver gold ratio is probably the most bullish thing about silver right now. Silver is way too undervalued relative to gold by all historical standards. And that means silver is going to outperform gold massively as the first at mean reverts and overshoots the upside and becomes more valuable than gold compared to historical norms. So yeah, that's the main bullish argument for silver in my opinion, Jim.
Is geopolitical unrest a threat to silver miners?
Individually, absolutely. You have a mine, you can't move it, and that's one of the things I hate most about gold stock and silver stock investing. I've had so many companies over the past couple of decades who've had great mines, and there's a change of government in some country they're operating in, and all of a sudden the government's trying to extract more royalties out of them. The environmentalists are trying to shut mines down through activism, and so it's really risky for individual mines. But for silver as a whole, it's not risky at all. Global silver production is really well diversified. Once again, something like 2/3 of it comes as byproduct production from base metals and gold mining, and so those mines are all over the world. And so geopolitics can be a threat to individual silver mines in certain countries periodically, but not in the world as a whole. I mean, they're so spread out. And one thing I've observed about geopolitical problems is they tend to be cyclical. They'll happen in one country, they'll last for a year or two, then they'll fade. It's not like a global thing, it's a very specific country-specific thing. Some leader comes into power, some political party comes into power, they don't like miners, so they harass the miners. Pretty soon they realize that most of their export revenues are from mining, so they realize they're biting the hand that feeds them. Then they kind of scale back those regulations either themselves or when a new political party comes into power. So I don't see geopolitics as a threat to global silver supply at all, although on an individual mine level that's certainly not the case.
Does silver have a seasonality play?
It does. Absolutely. Once again, silver tracks gold pretty closely. Silver's a leverage play on gold, and gold itself is strongly seasonal. Gold tends to enjoy strong rallies from late summer, August, September, up till May or so. And then during the summer, June, July, August, gold investment demand tends to pull back. People go on vacation, not as interested in the markets, and so gold and silver drift sideways to lower in the summer. I call them the summer doldrums for the precious metals. Then that demand kicks up once again in the fall. So basically from fall to spring is the best time of the year to own silver from a seasonal perspective. The worst time is summer, but the best time to buy is right after summer. So late August, early September, that's when silver tends to see a major seasonal low. But obviously this time of year we're in late winter, early February time frame, and so there's huge upside potential seasonally for silver into mid-May, maybe even early June. And so the seasonals are on silver investors' side as well. I think seasonals are distant fourth in importance after sentiment, technicals, fundamentals, but seasonals are definitely something worth considering, especially for buy and sell timing.
Are there any major yearly cycles that you have to watch out for with silver?
Not really. I mean, once again, within years, it's good to buy silver late summer. Probably bad to buy it at the end of May because that's when it's probably going to peak seasonally for that big rallying season between fall and spring. On multi-year cycles, there probably are some, Jim, but the thing I watch for is bulls and bears. If silver's up 100 or 200% in the past couple years, it's probably topping, probably ready to roll over into a bear or at least a major correction. But if silver's been down for a few years in a row, like it was leaguing in early 2016, a bull is probably due regardless of where the seasonals are or where the multi-year cycles are. And so, just look at where silver's been. If it's much lower than where it's been in recent years, it's probably time to rally and time to buy it. If it's much higher than it's been in recent years, then you got to be wary that you're not buying in high near a bull market topping. So I think those bulls driven by sentiment and technicals and fundamentals override any multi-year seasonals.
Do you follow silver in your newsletter, and how can people get your newsletter?
Yeah, we sure do. We trade a lot of silver stocks in our newsletter. If your listeners go to zealllc.com, our website, they can check it out. We publish a monthly newsletter, a weekly newsletter. Both are priced relatively cheaply at $10 per issue. We follow the markets, trade precious metal stocks, offer a contrarian bent on what's going on, and I think people find it really useful.
Adam, thank you so much for being on This Week in Money.
Thanks for having me, Jim. Great chatting with you.
My guest has been Adam Hamilton, CEO of ZealLLC.com. He was speaking to us from Colorado.
Coming up, Dan Harris, next on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Dan Harris. Dan's a corporate lawyer with Harris Bricken in Seattle, and he runs the China Law blog online at ChinaLawBlog.com. Dan, welcome back to This Week in Money.
Thank you. Glad to be here.
We spoke a few months ago about restrictions being imposed on capital flowing out of China and the effect it's had on luxury and ultra-luxury real estate purchased by Chinese nationals in Vancouver and other cities around the world. China has recently implemented additional capital restrictions. What are the new restrictions, and can Chinese nationals still move money out of China to buy high-end real estate?
Okay, Jim. Well, you actually asked two questions there. The first one is, what are the new restrictions? And the answer is, I wish I knew. And the reason I say that is because there's nothing new in terms of written laws or regulations. It's just that every week or so, the banks in China are getting new oral instructions from the government. And the banks are owned or at least controlled by the government. Actually, virtually all of them are owned by the government, and the foreign banks are pretty much controlled by the government. And the government is, broadly speaking, telling them to do whatever they can to legitimately stop the outflow of capital from China. And the latest we have heard is that whenever possible, they're supposed to stop amounts of more than $10,000 from leaving any individual's bank account. Now, there has been one new restriction, not in terms of amount of money, but in terms of the use of the money, and that is that people who want to take out the $50,000 limit from China are supposed to sign a document saying that they're not going to use the money to purchase real estate.
And yet, I remember they would allow people to have a second child if they purchased foreign real estate worth more than $250,000. Doesn't that go against that policy?
I have never heard of that, and that does not make any sense to me. I mean, I guess it's possible if they were really trying to encourage people to have a second child, which to a certain extent they are, but actually, I mean, this is the first I've heard of that linkage, and it seems strange to me.
Well, obviously, it's a moving playground and moving rules as well. Are Chinese nationals now buying real estate in Seattle and other cities instead of Vancouver, especially since the government put in a 15% foreign buyer tax for the greater Vancouver area?
If the media is to be believed, and I think it is, the answer is yes. I don't really know what's going on up in Vancouver other than what I read, and what I read is that the market is down there because Chinese buyers are a lot less interested in Vancouver. I also read that Chinese buyers have become very interested in Seattle, and based on the phone calls that my law firm is getting, that is probably true, because we are getting a huge number of phone calls from local realtors asking for our help to facilitate the buyers of their real estate in being able to get money out of China.
Are people being as creative as I imagine they might want to be?
Yes, and I guess I'll give a classic lawyer answer by saying yes and no. A lot of these realtors who call us, I tell them, look, there's really not much point in talking to us because there's almost certainly nothing we can do. But I can tell you right now that a 10 or 15-minute phone call is not going to be helpful. So if you want to hire us, even though we're telling you the odds are overwhelming that we're not going to be able to help you, you need to hire us, you need to pay us. And virtually all of them walk away at that point. But occasionally I've had realtors who say, I just want to tell you my idea for getting money out of China. To which I usually respond by saying, look, we have probably 150 years of China law experience in our firm. We're constantly talking with banks and lawyers. If there were a legal way to do it, believe me, we would know about it. And then occasionally, despite all that, they'll send me an email with their purported legal way to do it, and it's not legal. And the hot new allegedly or purportedly legal way is via Bitcoin, and that is not, I mean, it might fly in the sense that the money might get out, but it's not legal. And China is making every effort it possibly can to clamp down on it, and it is slowly but surely succeeding.
Is foreign real estate still the desired investment for money from China?
Yes, it is. For a lot of reasons. I mean, historically, Chinese have always thought of real estate as a good investment, and they still do. And the wealthy Chinese, want to get their money out of China, and buying real estate has two functions. One, it's an investment, and two, it's a place they can run to should things get bad in China, either for China as a whole or for just them.
Is China's real estate bubble bursting? And if it is, will it have a financial effect on Chinese nationals that have real estate holdings in other countries?
That's a very interesting question, and somebody actually asked me that question earlier this week for the first time, and when they asked it, I was sort of taken aback, because my initial reaction is, what's China real estate got to do with anything? But then I started thinking more about it, and I think it will have an impact. Now, let me go back and answer the first part of your question, which is China real estate is the China real estate bubble bursting? I don't know if you use the word bubble. And my answer to that is, I don't really think it is. Meaning, I don't think China real estate is hot. I personally, not that I'm a terribly knowledgeable real estate investor. I'm not. I'm just a lawyer who does China law sitting in Seattle. But I don't think it's going to burst. I don't see it plunging 40 or 60%. Could that happen? Yes. Will it happen? Who knows? But what could happen is if, let's say, China's real estate prices fall 10, 20%, I think that will have an impact on places like Vancouver and Seattle, because some of the properties bought in places like Vancouver and Seattle is bought with real estate used as collateral to raise money in China or even outside China. And so that could influence what happens in places like Seattle and Vancouver. And it's also possible that as someone's net worth in China declines, that they feel they need to get more liquid, and they might sell their property in Seattle or Vancouver in order to achieve that. So I don't think it'll have a major impact, but I definitely think it could have an impact. But I guess I should probably leave it up to the economists to figure out how much of an impact that would really have.
When moving money out of China, what's considered legit and what's considered money laundering?
Well, I don't like the use of the term money laundering, because to me that's a criminal law term, and I'm not a criminal lawyer, so I don't know exactly what it means. So instead of my using the term money laundering, I'll just say what's allowed in China and what's not allowed in China. And also, it's important to note that countries like Canada and the U.S. generally don't seem to care very much about what people do in China that might be illegal when it comes to getting money out. Meaning, if somebody can get $5 million out of China to the U.S. or to Canada, and they're not supposed to do that in China, as far as I know, Canada and the U.S. don't really care very much unless the Chinese government tells them they should care because the money was stolen or something like that. But they don't care about the fact that it violates China law to send that money out. So really, what makes me always so confident that we can't help these realtors is the fact that China's laws are actually quite clear as to what is legal and what isn't legal in terms of getting money out of China. And what is legal is each person can send $50,000 out of China a year. And that means buying a $2 million house in Seattle cannot be done if it's just one person moving, cannot be done legally in China if it's just one person moving the money. Now, there are a lot of creative ways that Chinese citizens manage to get their money out of China, but technically they're not legal. And one way that I see just about every day is having the money that they earn never reach China in the first place. And a common example, the one that we see all the time, is we represent a lot of European, North American, South American, Latin American companies that are having their widgets made in China. And it must be about 80% of the time that our clients will draft a contract with a Chinese company for our client to pay $1 per widget to the Chinese company, and then we get the contract back, and they won't have changed a thing, or very little, except they will change the fact that the payments for the widgets made in Qingdao China should be paid for to a company in Hong Kong or in Taiwan or in Singapore. And our clients don't really care. There are certain things that matter that we change in the contract to account for that, but they don't really care where they're sending their $2 million for their widgets, and the money, let's say, goes to Hong Kong. Well, now it's sitting in a Hong Kong bank account, not a mainland China bank account. And a lot of people think, including apparently President Trump, based on his phone call last night with China, that that Hong Kong is part of China and the one China policy. Well, Hong Kong is part of China, but it has a separate legal and banking system. And the difference is that if I just did a deal with someone in Hong Kong for $5 million, I would know that they could wire me that money. If it were wired today, it would probably be in my bank account tomorrow morning. They don't need government approval. Nobody's going to stop them. Hong Kong has a different currency. No one cares about protecting capital outflows from Hong Kong. So when you hear about people from mainland China buying property these days, a lot of times they are doing it with money that they've had sitting in Hong Kong, let's say, for the last 2, 3, 4, or 5 years. They're not buying the property by sending money from mainland China.
Are Bitcoin and other cryptocurrencies being used to get money out of China?
Yes, they most certainly are. And that is the hot new way to get money out of China. I spoke with someone the other day who said he knows somebody, an American, who goes to China every month with a USB stick. Now, I don't know if he was saying that for symbolism purposes or what, because it seems to me you don't really need a USB stick. But this person goes to China and downloads millions of dollars in Bitcoin money and comes back to the United States and then divvies it out to the people who sent him. Now, China knows this is going on. China hates this is going on. And I just read this morning that China went to 2 Bitcoin dealers in China and got an agreement from them that they would not send Bitcoin out of China anymore. And I suspect that within the next couple of weeks, getting Bitcoin money out of China is going to be almost as difficult as getting money from a bank in China to, let's say, the U.S. or Canada, because China is very serious about stopping capital outflows, and they're trying to plug every crack. And Bitcoin is definitely one of them. And what I also predict will happen is that China will make an example of 1, 2, 3, or 4 people who tried to get money out or did get money out using Bitcoin and arrest those people. And that will effectively go a long way towards shutting down Bitcoin as a way to get money out of China. So I think I'd call that door half shut already, and I expect it to close even further very shortly.
Are investigators from China working on money laundering files in Canada and the U.S.?
Well, I don't have any direct knowledge of this, but I am quite sure that they are. And I say that because from what I've heard from people, including people in the U.S. government, and from what I've read, I hear that China and Canada are getting a lot more willing to work with China, and China's getting a lot more willing to work with Canada and China and the United States to go after people who earn their money illegally. I doubt that there's that much going on between Canada and China or between the U.S. and China in terms of trying to stop somebody from, let's say, getting legally earned money out of China via Bitcoin. I don't think Canada and the U.S. really care about that, but I think that it's a little embarrassing to both Canada and China, and the United States and China, actually, to have so many government officials from China with really nice houses in Vancouver and in Seattle, although I actually live in Seattle. It seems like most of the government officials live in they don't live in the city. They usually live in Bellevue or Redmond, some of the eastern suburbs that are east of Seattle, and wouldn't surprise me if the same is true of Vancouver. But I think that there is a lot more cooperation now between North America and China in terms of going after people who earn their money illegally than there was even a year or two ago. And I've been reading recently that there's a lot more talk between both Canada and China and the U.S. and China about extradition treaties. Because as far as I know, neither Canada nor the United States have an extradition treaty with China, and it wouldn't surprise me if within the next year both countries did. But you don't need an extradition treaty to extradite somebody, and you certainly don't need an extradition treaty to help China investigate people who come to Canada and the U.S. with ill-gotten gains. And Canada and the U.S. don't necessarily want those people in their countries, and they want help from China on the flip side, because there are people who go from Canada or the U.S. to China with ill-gotten gains.
Are you able to help Chinese nationals who have technically laundered money to buy foreign real estate?
Wow. Okay, let me think about that for a second. I guess I hate to answer with a yes, but what I can say is that if somebody from China comes to me and says, I'm buying this $10 million property, will you help me on the legal side? The answer would be yes, because I have no reason to know where this person got their money. And as a U.S. lawyer, I'm under no obligation to dig into that reason, especially when I have no reason to be suspicious. Now, it's interesting you ask that question, because we have an office in Spain, in Barcelona, and the answer there would be the exact opposite, which is why we do not really make much of an effort to bring on Chinese clients in Spain, because in Spain, Spanish lawyers are required to know where their foreign clients, they could be from the U.S. or Canada or China, they're required to know where they got that money. And they are required to make the Chinese client or the U.S. client fill out a form explaining that. And if they have any reason to be suspicious, they're even required to alert the Spanish government. So the money laundering laws, and now I just use that word, but I think it's probably appropriate here, are stricter in Spain, at least for lawyers, than they are in the United States. And because of that, not only our office, but a lot of Spanish lawyers are both reluctant and extremely careful when taking on clients who are sending a lot of money into Spain.
Dan, can you tell our listeners a little bit more about China Law Blog?
Sure. It's a blog we started a long, long time ago. I'm not exactly sure when, but it was more than 10 years ago, and we describe it as being about the law of China business and the business of China law. And its goal is to help Western companies do business in China or with China. And what that means mostly is that just about every day we write about what we as China lawyers see and do every day. And we have lawyers in China and in Seattle and in Oregon and in California, San Francisco, and even in Spain that are dealing with China every day, and we write about it to the extent we can without revealing client confidences. But also, interestingly, because of the blog, we might write about we just learned that this is a way people are trying to get money out of China, or this is what is going into China contracts, and we write about it, and we might get 4 or 5 emails or comments on the blog from people we know or people we don't know saying, yeah, and I'm also seeing this. So it's a really, we wrote it with the intention of helping educate Western companies on China, but it's been a good education for us too, because it really helps us expand our reach farther than we ever could just as a law firm, and it helps us stay up to date on what's going on in China.
Dan, thank you so much for being on This Week in Money.
Thank you for having me.
My guest has been Dan Harris, a corporate lawyer with Harris Bricken in Seattle. He runs the ChinaLawBlog.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Adam Hamilton, and Dan Harris, and thank you for listening. Any questions can be sent to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen.